This advanced trading indicator was created by Dean Malone. With over 19 years of financial market experience, he created an indicator that was designed for assessing the market state, the market sentiment, the market trend, and finding profitable trade signals. In today's video, we will be showcasing exactly how the indicator works and how it can be used to enter into profitable positions. Let's first add the indicator to the chart. Head over to the Indicator Search tab and search for the TDI indicator. Select the indicator made by Bromley and add it to the chart. This is the TDI indicator, which stands for the Traders Dynamic Index. It is an advanced indicator, however, the principles of the indicator are actually quite simple. The indicator displays and combines multiple indicators, allowing you to read the market sentiment, volatility, and momentum at the same time. The first one it combines is the RSI indicator. In the TDI indicator, the RSI is used to determine the strength of the trend. Then the moving averages are used to smooth the lines. Finally, the Bollinger bands are used to estimate the volatility of the market. To understand how we can use the indicator, let's first go over how the indicators are integrated into the TDI. The red line represents the RSI indicator. The indicator can be used to identify the strength of a trend or to determine if the market is oversold or overbought. The green line is a simple moving average that has been applied to the RSI indicator and can be used to determine if a trend has switched. The orange line is the basis of the Bollinger Bands indicator. This line is also commonly known as the middle Bollinger line. This line is usually used to identify the overall market direction and sentiment. The final two lines that are integrated into the indicator are the upper and lower Bollinger Bands. These lines help estimate the volatility of the market by showing the amplitude of the oscillations. Now let's change the indicator settings to optimize the indicator for the strategy. It's important to keep in mind that the indicators within the TDI are calculated based on the RSI. So having a longer RSI period will cause for less frequent longer-term signals to be displayed. On the other hand, having a shorter period RSI will cause frequent short-term signals to be displayed. Now that you know how the settings affect the signals, let's optimize them for the method that we will be using to read the TDI. Head over to the Indicator Settings tab and click on the Inputs tab. We will first be changing the RSI period to 13, after that we will change the band length to 34. Finally change the fast MA length to 2, and change the slow MA length to 7. Now let's also change the style settings of the indicator to make it more visible. Click on the Style tab, after that change the opacity and saturation of the lines to make them easier to see. That was all that we needed to do. Now let's take a look at how the indicator can be used to enter into positions. The first method of reading the indicator is by looking for a crossover of the middle orange line with the red RSI line. If the red RSI line crosses above the orange line, this indicates that there is a longer-term bullish bias starting to play out, which signals that it is a good idea to enter into a buy position. The opposite is true if the red RSI line crosses below the orange line, then this indicates that the market has switched to a longer-term downtrend, indicating that it is a good idea to enter into a sell position. For shorter-term trends, it is better to look at the crossovers that occur with the red RSI line and the green RSI moving average line. As you can see, whenever the red RSI line crosses below the green moving average line, it usually results in a short-term downtrend. However, if the red RSI line crosses above the moving average line, it indicates that a short-term uptrend is playing out. As you can see here, it resulted in the pricing making a small bullish rally. Even though both methods work well, they don't incorporate the upper and lower Bollinger Band lines. A good way of reading the TDI that incorporates both the RSI and the Bollinger Bands works by looking for times where the RSI spikes above or below the Bollinger Band lines. This allows you to dynamically look for overbought and oversold zones. Whenever the RSI indicator crosses above the upper Bollinger Band lines, it is considered that the market is overbought. This means that it's a good time to sell. To enter into a buy position, the RSI indicator will need to cross below the lower Bollinger Band, indicating that the market is oversold. As you can see, entering into positions with this method works quite well. However, there are still false signals that are generated. To avoid these false signals, let's add 2 more indicators to the chart to complete the strategy. But before that, if you are looking for a broker that has extremely low commissions and spreads, then check out Henko Trade. The best broker to trade forex, indices, commodities, or crypto. They have live chat support so that any questions you may have can be quickly and easily answered. One of Henko Trade's most prominent promotional offers is the matching deposit bonus that can be claimed when you open an account with Henko Trade. Sign up via the link in the description to register with Henko Trade and get access to all of these perks. The first indicator that we will be adding is the exponential moving average. Head over to the Indicator Search tab and search for the EMA indicator. Select the indicator made by TradingView. The second indicator that we will be adding to the chart is the triple exponential moving average, also known as the TEMA. Search for the TEMA indicator and select the indicator made by TradingView. Those were all of the indicators that we will be using for this strategy. We will first change the EMA indicator settings. Navigate to the EMA indicator settings and click on the Input tab. We will be changing the length to 200. After that, click on the Style tab. Here we will be changing the color to white. Now head over to the TEMA indicator settings. We will first change the length to 200, after that head over to the Style tab. Here we will be changing the color of the indicator to yellow. That was all that we needed to do. Now let's take a look at when we will enter into a position. To enter into a buy position, there are certain conditions that we need to meet to ensure that we have a high probability of success. The first thing we look for is the red RSI line on the TDI indicator to close outside of the lower Bollinger Band line. This indicates that the market is currently oversold and could potentially reverse soon. Secondly, we need the price action to touch or go below the triple exponential moving average, which is an indicator of a strong downtrend. Finally, we want the price action to be above both the triple exponential moving average and the regular EMA, which shows that the trend is starting to reverse. Once we have met all three of these conditions, we can enter into the position on the first candlestick that closes above both moving averages. However, we need to keep in mind that if the RSI indicator has already crossed above the upper Bollinger Band, indicating that the market is overbought, we should not enter into the position. This is because the market could potentially reverse again soon, leading to losses. In this particular case, the RSI indicator has not yet crossed above the upper Bollinger Band, so we can enter into the position. To manage our risk, we will be placing the stop loss at the recent swing low, which is a level where we expect the market to reverse if it continues to move against us. For the take profit, we will be targeting a 1-to-1 risk-to-reward ratio for 50% of the position and a 1-to-2 risk-to-reward ratio for the remaining 50%. This means that we are aiming to make twice as much profit as we are risking for the second half of the position. Now let's see how the trade plays out. As you can see, the first take profit target has been met. This means that we can now move our take profit and aim for a 2 times risk to reward ratio. After doing so, we will also be moving the stop loss to break even to avoid losses. To enter into a sell position, the following conditions will need to be met. First, we will need the red RSI line on the TDI indicator to close above the upper Bollinger Band line, indicating that the market is overbought. Second, we need the price action to touch or go above the triple exponential moving average. Finally, the price action needs to be below both the triple exponential moving average and the regular EMA, indicating a potential reversal. If all three conditions are met, we can enter into the position on the first candlestick that closes below both moving averages. However, we need to be cautious of the RSI indicator crossing below the lower Bollinger Band, indicating an oversold market. In such cases, we shouldn't enter the position as the market could potentially reverse again soon. However, this isn't the case here, so let's enter into the position. To manage risk, we will place the stop loss at the recent swing high and target a 1-to-1 risk-to-reward ratio for 50% of the position and a 1-to-2 risk-to-reward ratio for the remaining 50%. Now let's see how the trade plays out. The first take profit target has been met, meaning that we can now move our take profit and aim for a 2 times risk-to-reward ratio. Now that we have done that, we will also be moving the stop loss to break even to avoid losses. Now let's see how the trade plays out. I hope this video could showcase a few interesting and profitable ways that the TDI indicator can be used to enter into positions. If you enjoyed the video, please leave a like and subscribe to the channel so that we can keep making these free videos. If you have any questions, feel free to leave a comment.